What's happening with the Bank of Canada? Will they be cutting rates in 2024, especially now that they paused in March? Let's have a conversation around what the Bank of Canada is paying close attention to, what we're paying attention to, especially as we round out March's announcement, waiting for April, the next time they meet, April 10th, and ahead of their CPI inflation numbers, that print that's going to be coming out by Stats Canada on March 19th. On this week's episode, I want to take an opportunity to go through some of the Bank of Canada's most recent conversation points from their press conference, share some of our thoughts and opinions about what we see happening as we round out March and get into April and what it means for the rest of 2024. So we welcome you back to the channel. It is Friday, Finance Fridays, and I'm your host, Anthony with In Touch Mortgage Solutions. And if you haven't subscribed to the channel, we do invite you to do so. Don't forget to hit that notification bell, leave your questions and comments in the comment section below, like, share the video, but let's get right into it. So on Wednesday, March 6th, the Bank of Canada held for the fifth consecutive time since getting to 5%, that overnight lending rate back in July, where we saw them increase from 4.5% to 5%. Now we've definitely been on a holding pattern, and I think that's going to be something that we're going to see playing out through a few more rate announcements coming out throughout 2024. So with that being said, we do know that on April 10th, the Bank of Canada will be meeting again, and that's going to be after the Bank of Canada gets those statistics. The Bank of Canada will be reviewing the inflation numbers, those CPI numbers that are going to be coming out on March 19th, and it's anybody's guess how those numbers are going to shape up right now. But yes, we did get some really good numbers in January. Does 1 month make a trend? And the Bank of Canada is still indicating that there's a lot of underlying pressures in inflation. And in the next rate announcement that we're going to be getting in April, we should be getting a consumer survey, a business outlook survey, as well as a monetary report from the Bank of Canada outlining some of their forecasts and projections. And we'll see if that really changes direction, how that could move the market. Now, speaking of moving markets, obviously the Bank of Canada's most recent rate announcement did have an impact on the Bank of Canada 5-year bond. We saw it tick up on the day that the announcement was issued, and then it sort of pulled back, and it is waffling back and forth. But I will say this, just coming out of a conference with our network, our Centum network, where we're a brokerage house within that particular segment, we did hear and speak to a lot of our lenders. And speaking to some of the major lenders, their appetite to lend is still very healthy, even with the fact that the Bank of Canada could be cutting rates at some point, maybe not. Obviously, what's coming out of the US, will the Bank of Canada, will these rates, actually these fixed rates, drop? Even though the Bank of Canada is obviously looking at the potential for a rate cut in some point of 2024, I do believe it will happen. But the Bank of Canada will not give forward guidance on their forward guidance. And so what I mean by that is the Bank of Canada is not going to come and say, hey, we're going to cut rates at this particular time or this particular announcement, because that could obviously swing markets, especially real estate markets, in a direction that they don't want to see. Now, quickly back to the banks that we talked to. The banks did report their earnings. They did come in very healthy. They did put provisions for credit losses. So that means they're putting millions and millions of dollars away, if not billions of dollars, for these potential for bad loans. But with all that being said, some banks are very optimistic. They're not very concerned. They are healthy. They have good balance sheets. They are lending, and they are going to be posting their billion-dollar quarters, even with the fact that there has been some uptick in some of these mortgage arrears, where they're seeing some of these mortgages and these pressures from credit cards and loans sort of mount. Now, ultimately, the Bank of Canada is fully aware of the debt situation here in Canada. The Bank of Canada is very conscientious about what they say. Now, with all that being said, the Bank of Canada did point to the fact that, hey, look, real estate prices could be on the uprise, they could be reigniting, and we're going to be paying close attention to that.
If everything else in our projection was the same and housing was stronger and government spending was stronger, growth would probably be stronger and there'd probably be less downward pressure on inflation. And so that is something we would have to take into account when we consider our interest rate setting.
And that is something that I see the Bank of Canada doing, because as more and more Canadians start watching these particular rate announcements, they start listening to the Bank of Canada, what their forecast is, what economists are saying the Bank of Canada will do. That is influencing the decisions by many Canadians to get into the market sooner than later. And that's something we've talked about on this channel, where we see more Canadians starting to front load the market, get in ahead of any possible rate cuts. That is also due with the fact that many Canadians were sidelined, right? A lot of Canadians took that time to wait to see if home prices adjust, if fixed rate mortgages drop. And now that the Bank of Canada has positioned themselves with the possibility or the higher probability of cuts than hikes, well, that's putting a lot more pressure on the market. And we're seeing that as multiple offers tick up. Firm offers continue to be a problem for some, right? That's going in without any condition of financing. We're seeing those home prices tick up. A little bit more inventory coming up to the market, but prices are tending to go up a little bit in certain markets, not all markets, but in some in the GTA and surrounding areas. So we're seeing that, and the Bank of Canada is also noticing that, and that's going to be something that may give the Bank of Canada cover to hold policy rates steady at 5%, maybe up until September. I really think that the Bank of Canada is not going to be doing any cuts. I think it's too soon. I think the Bank of Canada is going to be very foolish if they cut rates too soon, because that will reignite the housing market. And it doesn't really need at this point to cut rates to start that process. It's already seeing the writing on the wall as we get into the spring market, and it potentially sees that, hey, many people believe that the Bank of Canada is going to cut rates. So they came out this recent press conference really trying to be aggressive, saying, you know, it's too soon to talk about rate cuts. Don't ask us about rate cuts. We're not going to give forward guidance on our forward guidance, which means we're not going to be talking about when we're going to cut rates. And this is an obvious question that keeps on getting asked by reporters to the Bank of Canada. And there were some other comments and conversations around what was called the repo market, but I would like to do another episode on that, as it does require a little bit more insight. But ultimately, what happened with that particular scenario is what's playing out in the broader economy, the broader real estate market. Much like the markets thought that the Bank of Canada was going to cut rates, which drove some issues in the overnight lending market, that repo market, it's happening in the real estate market. Many Canadians are thinking, hey, Bank of Canada is going to cut. You know, this is something that's going to front run the market, so we need to be very cautious. So real estate, something to pay really close attention to, especially if you're thinking about getting into the market. When do you think the Bank of Canada is going to cut? Because ultimately, I'll leave with that thought, is that if the Bank of Canada doesn't cut in April, and that means when I get to the April point, there's 5 meetings left. And will the Bank of Canada cut at some point in June or July or September? And if they do, how aggressive are those cuts going to be? Because the Bank of Canada did point to saying, look, we're aggressive on the way up. We're definitely not going to be as aggressive on the way down, and to ensure that inflation is dead and gone. Now, the other thing that the Bank of Canada did talk about at their most recent press conference, amongst other things, was that, hey, government spending is going to be an issue. On April 10th, the Bank of Canada is meeting, and then after April 10th, the Bank of Canada will be obviously talking on April 10th. The government will be tabling their expenditures, their report on what they plan to spend, if it's going to be a deficit, how much they plan to run as a deficit, if they run a deficit at all. Most likely, I'm assuming they're going to run a deficit, especially ahead of an election year. But ultimately, these two particular things, real estate and the government spending, are going to be two inflationary pressures that the Bank of Canada will have to pay very close attention to in April. We'll see how those numbers play out. But ultimately, I really think the Bank of Canada is going to be waiting till September. Let us know if you think the Bank of Canada is going to be cutting sooner than later, and when do you think the Bank of Canada is going to start cutting rates. But we'll leave the video here, wishing everyone a wonderful Friday and an even better weekend ahead. Thanks again for watching, and thanks again for clicking.